Many of us know about SIP, but have you heard about SWP? One builds your wealth and the other gives you income. Hello everyone and welcome back to our channel. In today's video, we'll explain SIP versus SWP and which one is better for you. But before we begin, do not forget to hit the subscribe button and click the bell icon for more upcoming updates. What is SIP? SIP stands for Systematic Investment Plan. It's a method where you invest a fixed amount regularly in mutual funds. Think of it like a recurring deposit, but with the stock market. Builds wealth over time through compounding, makes investing a habit, and reduces the risk through rupee cost averaging. Now, on the other hand, SWP stands for Systematic Withdrawal Plan. It allows you to withdraw a fixed amount from your mutual fund investment regularly. It's like giving yourself a monthly salary from your investment. Benefits of SWP include providing a steady income stream, ideal for retirees or those needing regular cash flow, keeping your remaining investment growing. Now let's look at the difference between the two of them. Purpose. SIP is for investing, whereas SWP is for withdrawing. Cash flow. SIP is money going in and SWP is money coming out. Best for. SIP suits wealth builders and SWP suits income seekers. Now let's look at a couple of real life examples. Suppose you invest 5,000 rupees monthly in an SIP for 10 years. After the 10th year, you start an SWP to withdraw these 10,000 rupees monthly. This way, you build wealth first and then enjoy a steady income from it. Now, which one should you choose? Well, it depends on your financial goals. Choose SIP if you want to build wealth and invest regularly, and choose SWP if you want regular incomes from your investments. Now that you know the difference between SIP and SWP, you must also know which one suits you better. Let us know in the comments down below. And if you found this video helpful, don't forget to like, share and subscribe for more insights on mutual funds and investing.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.